And now with the latest business and market news, here's Jayne Edwards.
Thanks, Alan. The US market closed on Friday back where it started after another day of worries about the economy, which initially pushed share prices down before a recovery in the afternoon. US GDP figures came in at 2.4% in the last quarter, which is slightly worse than expectations. But in the same report, economic growth for the March quarter was revised upwards massively from 2.7 to 3.7%, softening the blow of the June result. The big concern is still unemployment, and President Barack Obama has conceded more needs to be done.
Our economy is growing again instead of shrinking. That's a welcome sign compared to where we were, but we've got to keep on increasing that rate of growth and keep adding jobs so we can keep moving forward.
On Wall Street, generally strong company earnings have helped the market to record its best monthly rise since July last year. The S&P 500 is up by 7% this month, but it's been a choppy ride and volumes are unusually low as investors stay on the sidelines waiting to get a clearer picture of the economy. Across the week, US shares were flat. The UK market fell by 1% amid a sharp drop in consumer sentiment, while Europe, Japan and Australia all lifted by 1%. With our local market news, here's Tom Elliott.
Well, as you just heard, the share market did rise modestly over the week. This was mainly due to the benign inflation data which came out. This means that when the Reserve Bank meets next Tuesday, interest rates will almost certainly stay on hold. Of course, not all sectors did well, in particular the insurance sector. QBE came out with a shock profit downgrade. That sent its shares downward sharply, and competitor IAG didn't fare a great deal better. Turning to the supermarket sector, and are we seeing a changing of the guard? Maybe it's the MasterChef effect, but Wesfarmers, which of course owns Coles, saw its share price rise quite strongly during the week, whereas its major competitor Woolworths shares were flat to up just very slightly. In takeover world, well, there was quite a bit of activity. Firstly, the target statement for Lihir Gold came out. The board did say there was a remote possibility of another bidder, but most market watchers feel that Newcrest's bid will succeed in the very near future. AWB and GrainCorp have announced a nil premium merger. It might be nil premium, but AWB shares did go up. However, GrainCorp's was sold off. Some people don't think that GrainCorp and AWB should be merging in this fashion. And finally, iiNet has bought AAPT, the telecommunications company, from Telecom New Zealand for the bargain price of just $140 million, a lot less than what Telecom New Zealand paid several years ago. Winner of the week is Centro Properties, up 34% after refinancing $3 billion worth of debt. Loser of the week is Program Maintenance Services, down 25% after a substantial profit downgrade.